Dear learner, in this video, we are going to learn about the accounting treatment of the bill of exchange. We have studied in the previous video about the bill of exchange. What is the meaning of bill of exchange? Features of bill of exchange, how bill of exchange comes into the picture of buyer and seller. But now, what accounting treatment we are going to give to the bill of exchange transaction? So, bill of exchange comes into the picture when we buy the good, when we sell the good. As a creditor, when we sell the good, so what entry we are going to do? Debtor account debit to sales account. And the debtor is going to do the entry of purchase account debit to creditor account, because when we sell the goods goes out, right? And here, as we are selling the goods on credit, so bills comes into the picture. So bill receivable account debit to debtor account. Yes, because we have the debtor has signed it and written it back. And in the debtor books, we are going to do the entry creditor account debit to bills payable account. So at the time of maturity, date, what we're going to receive? We're going to receive the cash. So cash or bank account debit to bill receivable account as cash comes in. Learner, see, these two entries are very important, because when the sales will take place, only the bill of exchange is going to come into the picture. So these two entries are very important, and these two entries are must. So these are going to be there every time. Only the entry which is going to change is the way the seller is going to endorse. At that time the entry is going to change, or discounting of bill, or bill sent to collection. So let us study all that transaction also, right? Let us see when the drawer get the bill discounted. Means the seller want the money before the maturity date. So what seller is going to do? See, here also the two entries are same. Debtor account debit to sales account, bill receivable account debit to debtor account. Now, before the maturity date, the seller is going to the bank, right? And he or she is asking for a money. So bank is not going to give it free. What bank is going to charge here? Discount. That charges, we're going to do the entry as a discount account. Why we're going to do the discount account? For example, the bill was of rupees 10,000, right? The bill was of rupees 10,000. Now bank is saying, I'm going to charge 10% or something like that, 100 rupees. So how much money the seller is going to get here? How much money? 9,900, right? So 100 rupees the bank is charging. So bank account debit, discount account debit to bill receivable, because now the bill is with bank. So here in debtor we will not do any entry, because right now debtor is not in the picture, but we have brought bank into the picture. So who is going to take the amount on the maturity date? Bank. So bills payable account to bank. Now let us see another transaction. When the bill is retained by the drawer with him and sent to the bank for a collection a few days before maturity. Means he is sending it back. He is giving instruction to bank that please collect it on my behalf. So here again, who is bringing bank into the picture? Only the seller is going to bring it. So the entry is only going to be in the creditor or in the drawer's book, not in the debtor accepted book, because he or she is not in the picture. He or she will only come into the picture when the maturity date comes. So the two entries are going to be same. The third entry is going to be changed. So bill sent for collection account debit to bill receivable account. No entry in the debtor, but at the time of maturity, bank is going to collect, and then bank is going to send an advice or send a notice or going to send instruction that we have received the amount. So what entry is going to come into the drawer account? Bank account debit to bill sent for collection account. Okay, let us see the next slide. Suppose that when the bill is endorsed by the drawer in a favor of his creditor. Here what drawer is doing? Drawer is not waiting till the maturity date. What drawer has done? Drawer has given this bill to one of his creditor to clear up to settle his debts. You know, this is one of the feature of bill of exchange. We can do it. We can easily transfer, right? So here only the third entry is going to change. Here we are going to write down the creditor's name. The creditor account debit to bill receivable. Again, debtor is not in the picture, right? So at the time of maturity, in creditor book, no entry, and in the debtor book, bills payable account to bank or to that specific person. We have seen the accounting treatment of three. The first, when we retain the bill at maturity date, easy peasy entry, okay, we just cancel it. Next, we have seen the discounting of bill. Here, the bank comes into the picture, but at the maturity, there is no entry in the drawer's account because bank is in the picture. Bank becomes the payee here. Next, bill sent for collection. Again, bank comes into the picture. But here, when bank get the collection, bank send the advice to the drawer and then entry comes there. Okay. So, you need to understand the question very nicely. And these situations are definitely going to come into your times also when you're going to become a businessman. So just imagine like a businessman. Suppose you are a businessman and you are selling the goods. So what type of situation can come into your times, right? So let us see, understand by one of an example. Amit sold goods for rupees 20,000 to Sumit on credit. So this line, what entry we're going to do? Amit sold the goods. So goods goes out. So we're going to do the sales entry, right? So Amit is going to be what? Correct. Amit is going to be the creditor, right? Sumit is going to be the debtor. Amit drew a bill of exchange upon Sumit. Why he is drawing a bill? Why the bill came into the picture? Because the transaction is a credit transaction. Same amount for 3 months. Here the bill is drawn for 3 months. Sumit accepted the bill, returned it to Amit. So Sumit met his acceptance on maturity. Learner understand the bill was drawn on Jan 1, 2015, right? It is drawn for 3 months, right? And if you remember it, we have discussed the maturity of bill in the previous video, and we have even discussed the business ethics to give it a 3 days grace, right? So here also we're going to give a 3 days grace. So it is going to be 4th of April, right? Now we're going to, with this example, we're going to understand all the situation. The first situation, Amit retained the bill till the date of maturity and collected directly. Okay, so let's understand it. When the bill was retained, so all the entries are going to be same. Sumit account, we are seeing right now, we are looking into the books of Amit because Amit sold the good. We are looking into the seller's book. Sumit account debit to sales account because it's a sales and sales is always credit. As it is a credit transaction, the bill is going to come into the picture. So bill receivable account debit to Sumit account. Now at the date of maturity, what is the date of the maturity here? Jan 1. We are going to add 3 days of grace. It is going to be 4th of April. So bank account debited to bills receivable. Easy, nothing hard. It's going easy. Now let's see another. When the bill was discounted, here Amit is going to the bank before maturity date. Okay, and we have already read that it's giving 12% discount. But 12% discount is per annum. And here we have the bill for 3 months. So he went on Jan 1st. So we're going to calculate as per month. So it is 600 rupees. So how much bank has charged? 600 rupees. And how much Amit has received the amount? 19,400. So are we going to do any entry of this in the debtor account, debtor book? No, because here the debtor is not in the picture. Sumit is not in the picture. Amit has went to the bank. But at the time of maturity, bank is going to be in the picture, not the Amit. Because Amit has given it to the bank and he has taken it, the cash, whatever cash you want to take it from the Sumit, he has taken the cash right now. Clear? Let us see another one. When the Amit endorsed the bill, Amit give it to one of his creditor, Ankit. He want to settle his dues. So he has given that 20,000 rupees. He want to give the 20,000 rupees to Ankit because Ankit was asking for it. So what he has done, he has given that same bill to Ankit. Now, who has come into the picture? Ankit. So, Ankit is a receiver here. So, receiver is going to be debit. And as the bill has went from Amit, Amit is not holding a bill. So, bill receivable is going to cancel. So, Amit account debit to bill receivable because bill receivable goes out. Are we going to do any entry in the Sumit book? No, because here Sumit is not in the picture. Sumit will only come into the picture when maturity dates come. Okay, let us see next situation. When the bill was sent for collection. Now Amit need to go out for some days or something like that. He is not able to collect that bill. So he is requested, he has sent the bill to the bank within clear instruction. On which date he has sent it? March 31st March, right? So we're going to do the entry. Bill sent for collection account debit to bill receivable account. Now on 5th of April, bank has sent an advice. Okay, we have received your amount. Okay. 4th of April, Sumit was supposed to pay, so he has done the payment. Now bank has sent an advice. So what entry we are going to do? As the money comes from the bank, so bank account debit to bill sent for collection. Why we are not doing bill receivable? Because we have done the bill receivable entry on 31st March only. Learner, understand, the first two entries are repeating in all the situation. Only the entry which is changing is the as per the situation. right? When you're going to the bank will come into the picture. When you will go to the endorser or you will go to the creditor will come into the picture. And the general entries are same. Debit what comes in, credit what goes out. And I know you all know the rules, so it is going to be easy. Now, what entries we are going to do it in a Sumit account, Sumit book, Sumit journal. So, first entry is going to be purchase because Sumit has purchased. So, purchase account debit to Amit account. And Sumit has even accepted the bill. So, we are going to do Amit account debit to bills payable account. And all that situation or all the transaction entries, we are not going to do it in Sumit book. Why? Because at that time Sumit is not in the picture. Sumit is only going to come to in the picture when maturity date comes. So on April 4, it is going to be bills payable account debit to bank account. So I hope, learner, the three situations are very clear, right? So let us understand how seller thinks. Just imagine, thing doesn't go as per the plan. Seller has thought on maturity date, I will get the money. So seller thought on 4th of April, I will get the money from Sumit. But he didn't get it. Or seller thought on discounting with the bank is going to get the money. But bank didn't receive it. Or seller thought, send the instruction to the bank for collection, but bank didn't receive it. Or the seller has given it to the creditor, Ankit, and Ankit didn't receive it. Suppose it doesn't go as per the plan because emergency do happen. What would be the reason behind it? Let us see. The drawer is unable to pay. The drawer is insolvent due to insufficient balance. He or she is not having enough money in his account to pay. That can be a reason. Or I don't want to pay. Sometimes, that attitude that they are having a late payment behavior. That is why, we have a credit score also. We always check the credit score for the loans and everything. That is why it is there, to check your creditability. Sometimes few people don't want to pay. Then what are you going to do? Then what is that name? Then what? That is called dishonor of bill. When you do the payment on a maturity date, that is called honor of bill. You give a respect to that document. While you have done the signature, you have given a respect that I am going to pay on this date. But when you are not doing it, that is called dishonor. You are disrespecting it. Let us understand in accounting way, what accounting treatment we are going to give it. When it's very easy, when you have given a bill, you have done the entry, bills goes out, right? But when you have not received the amount, what do? You cancel the entry. So entry become reverse. Whatever you have done debit, that will become credit. When you have done bill receivable debit, here when the bill is dishonor, you're cancelling that entry. So what are you going to do? You're going to do it credit. But who is responsible for that? The buyer is responsible, right? For example, Anju received bill of exchange duly accepted by Manju, which was dishonored. So here Manju has not done the payment. So when the bill was kept by Anju with her till maturity, so the entry would be Manju's account debit to bill receivable account. When the bill had been endorsed by Anju, Anju has endorsed it to Sandhya. Okay. So now who's going to get affected with the dishonor of bill? Sandhya. So Manju's account debit to Sandhya's account. When the bill was discounted by Anju with his bank, now who is affected? When the Manju is not doing the payment, bank is affected. Bank has given you the money. So we have in the beginning we have done bank as a debit. So here what we're going to do? We're going to do it credit because we're cancelling it. We are reversing it, right? So Manju's account debit to bank account. When the bill was sent for collection, here Anju has given the bill to the bank, right? But they didn't receive the payment. So Manju's account debit to bill sent for collection. Now you will think, is it dishonor of bill? It's so easy. No, it's not. You need to prove it, why you have not paid, why you have to give the reason behind it. So here the noting charges will come into the picture. What is noting charges? Here the notary public will come and they will try to find it out. But nothing comes free. If the bank is going to do the discounting of your bill, bank is going to charge. Same way, notary public are going to charge you. Okay. So if the seller is paying it, seller is going to give it to the drawer. You are drawee to do the payment. So noting authenticate the fact of dishonor. They find it out. You give it in a written that this is the reason. Maybe the insufficient of balance, or maybe you don't want to pay, or maybe you're not having enough money right now. For providing this service, a fee is charged by the notary public, which is called noting charges. And what are noting, how you detail it? Date, fact and reason of dishonor. If the bill is not expressly dishonored, the reason why he treated. You are having a sufficient money, you have not paid it. Why you treat it as dishonored? You have to give it a reason and the amount of noting charges. Now who is going to bear this and how you are going to do the entry? The entry recorded for noting charges in the drawer. Here drawer add that amount because drawer is not responsible for that amount. Suppose the bill is of 20,000 and the noting charges are 500. So what drawer is going to do? Drawer is going to add it. He is going to make it a bill amount 20,500. He is not going to separate it. Why he is not going to separate it? Because he is not responsible for the dishonor of the bill. So what entry we are going to do it? When drawer himself pays it, cash goes out. And who is responsible? Drawer. So drawer's account debit to cash account. When endorsee pays it, right? You suppose you have endorsed your bill to Ankit. So Ankit account debit to the drawer account debit to endorsee account, right? So here the drawer is responsible. So endorsee is going to be the credit. When the bank pays on discounted bill, again here the bank is in the picture, so drawer's account debit to bank account. When the bank pays in the event of sending the bill for collection to the bank, so drawer's account debit to bank. Here all the amount are including, right? Now suppose you are not able to pay the amount, right? But you are quite a genuine one. You are not having the money right now, but you can have money after 10 days. So you have a two option here. What are the two options? The first option, either you can renewal your bill, the same bill which you were not able to pay, or you can retire your bill. What is retiring of bill? These are the two options which seller create so that he doesn't lose his money. You know, as a businessman, we never want to lose our money, right? We try to give lot many options so that the business runs smooth and we never suffer. The first thing is the retiring of bill. What is retiring of bill? As the name suggests, see, when on the maturity date, when you get the payment, the bill get cancelled, right? Everything goes smoothly. But if you want the money before, you can even attract the buyer. So suppose you give me after rather than 3 months, if you give me before 2 months, I will give you some type of rebate or I will give you some type of discount, right? So that is retiring of bill. Renewal of bill means, suppose on the date of maturity, the buyer comes to you. These two happen only with the mutual understanding, right? The buyer comes to you and requests you, okay, see, I'm not able to pay it right now, but there are a few payments which are supposed to come after 10 days. So let me renew the bill. So what do you think when you're retiring the bill or when you're doing the renewal of the bill, what entry are you going to do? What entry are you going to do? Yes, you're thinking it right. First, you're going to cancel the bill at the renewal of the time and you're going to renew, means you're going to create a new bill, because you know it is a document, it is a written document with a stamp. You can't do scribbling there and you're going to start. No, you just need to cancel that bill and you need to make it a new one at the renewal of the time. At the retiring of time, already you're getting a payment, right? So bill is already getting cancelled. Okay, let us understand retiring of bill situation. When the drawer pays the bill before its due date, it is termed as retirement of bill. Means here the most important thing is date. For example, you're supposed to, the drawer is supposed to pay it on 28th of October, okay, but he's paying on 28th of September, so he's paying it before. Here, the drawer is going to give them a discount. That discount is named as rebate on the bill. Next is renewal of the bill. What is renewal of the bill? Here, the drawer, the holder of the bill is not in a position to meet the bill on its due date. So, drawer approaches the drawer with a request. He or she requests him to extend the time of the bill. So, if the drawer agrees, then the old bill, we are going to cancel the old bill and we are going to renew the new bill. We are going to start with the fresh bill. What is retiring of the bill? It is same. Only when a bill is honored by the acceptor, we are going to do the entry of rebate. Let us see that. Cash comes in, so cash account debit, rebate on bills account debit. Here the bill receivable is cancelling. So to bill receivable account. Okay. Next in the books of drawer, what entry we are going to do it? Bills payable account debit, cash account debit to rebate on bills. Let us see it by example. Amit sold goods for rupees 10,000 to Bubbly on Jan 1, 2015 and immediately drew a bill on Bubbly for 3 months for the same amount. Bubbly accepted the bill and returned it to Amit. On March 4, 2015, Bubbly retired her acceptance under rebate of 6% per annum. Here, she is doing the payment before and we are giving 6% per annum rebate. So, we are going to charge for 1 month only. So, what entry we are going to do? The first two entries are going to be same, but the next entry we are going to add rebate on bills like bank account debit, rebate on bills account debit to bill receivable account. So per month it is going to be 50 rupees. So we have given the rebate of 50 rupees. Let us see in the books of Bubbly. So in the books of Bubbly, she is buying the goods. So purchase account debit to Amit account. Amit account debit to bills payable account. And here he is going to do the same entry. Bills payable account debit to cash account to rebate on bills account. Why rebate? Rebate means 50 rupees. 50 rupees rebate she has got because she has paid the bill before. Let us see what is renewal of the bill. Renewal means we are cancelling the old bill and we are renewing our, renewing our terms, right? You can have 10 more days. But here the things, the new term which is going to come here is interest, the interest amount. So draws account for cancelling, it would be same. Draws account debit to bill receivable account. But interest entry, draws account debit to interest. Who is going to pay the interest? Draw is going to pay the interest. So bill receivable account debit to draws account. Let us understand it. By example, on February 1, 2015, Ravi sold goods to Mohan for rupees 18,000. 3,000 are paid by Mohan. So that means that is equal to 15,000. On the date of maturity of bill, Mohan requested Ravi to cancel. He requested is not able to pay it. So he has requested him for one more bill, that is for 2 months. But how much interest he is charging here? 12% per annum. But we need to do it as per month basis. So Ravi agreed to Mohan's request and cancelled the old bill and drew a new bill. So let us see the general entries on basis of this. So first we are going to cancel it. The first entry is going to be same, Mohan's account debit to sales account, cash account, bill receivable account to Mohan's account, right? Because he has given a cash here and he has drawn the bill for 15,000 only. Now on date of maturity, Mohan is saying cancel my bill, but he is going to charge an interest, right? So Mohan's account debit to bill receivable account to interest account. So it is for 2 months, so we are going to charge it for 2 months only. So that is equal to 300. Now the bill amount is 15,300. But after 2 months, how much is he going to pay? Bill receivable account debit, cash account debit to Mohan's account. And at the time of maturity, how much? Bank account debit to bill, because he has already paid the interest. So bill amount is 15,000 now. So bank account debit to bill receivable account. This is in the book of the seller. Now what would be in the book of Mohan? Same, he has purchased the goods. So purchase account debit to Ravi's account. Ravi's account to cash. Ravi's account debit to cash account to bills payable, because he is paying the cash of rupees 3,000 and he is asking for 15,000 bill. But at the time of maturity, he is not paying, he is not able to pay the amount. So bills payable account debit, interest account debit to Ravi's account. How much was the interest? 300. As per 12% per annum, for 2 months it is 300. Then your bill and you have been charged for 300. And Ravi's account debit to bills, because you are cancelling it. Ravi's account debit to bills payable account to cash account. Now new bill, you are going to do the payment on the maturity. So that is bills payable account debit to bank account. So we have understood renewal of the bill and retiring of the bill. So in this video, we have seen the accounting treatment of the transaction related to endorsement of the bill, discounting of the bill, when bill is sent for collection, and when seller thinks that he has blocked his money, so the bill has been dishonored. So we have seen the accounting treatment of dishonor of the bill. We have seen when there are two, with the mutual understanding, there are two situations where the buyer, the drawee want or the payee want to do the payment before the maturity date. So that is called retiring of the bill. When the payee is not able to pay on the maturity date, he or she requests for the extension of time. So we have seen the renewal of the bill. So I hope, learner, you have understood it very well. And you know, the bill of exchange is a very easy chapter. What you need to know is the basic first two entries and the, as per the situation, how to do all the accounting entries on basis of the main rules of accounts. Thank you.